In the life of this conference. We have never done this live Q&A before, but we thought it would be fun, a really nice way to have a more intimate wrap up to the whole week and learn more from you about what you're trying to learn about. So what we're most interested in are your questions about your startups and your companies and the kinds of problems you're trying to solve. Eric is a really amazing resource for advice in that realm. He, in addition to having seen lots and lots of companies, he has a different way of thinking about them than most people you can get advice from. So this is an incredible opportunity. And we wanted to flush out, before we started, all the personal questions that you might want to ask Eric. Because we're not that super interested in spending the day on that. And part of the reason we know you have them is because when you submit questions through our form, for the Q&A, we get a lot of questions about like, what do you eat for breakfast and things like that. So we're gonna get some of that out of the way right now as we're getting settled. All right, so let's start with that one. That's a good one. Breakfast. What's your usual breakfast?
when I remember to eat breakfast, which is not most days, I'm sad to say, I'm not really a morning person, so my brain doesn't function that well in the morning. Like I say, at 9 o'clock. No one thought that was funny. See, my brain does not. It takes a little while to kind of to spin up. So yeah, but I don't know. I had yogurt and granola this morning. So go ahead this morning.
Oh yeah, I'll take that.
Care about
so
that.
Yeah, tell
can
us.
tweak that, I guess.
Elaborate on your daily routine. Everybody wants to know, what do you do all day? How does it work?
I ask myself this question all the time. I am the anti-productivity hack. So do not take productivity tips from me. I have absolutely no daily routine. I do not do anything in the way that it is prescribed. I do not keep a to-do list and have absolutely no idea what I'm going to do from one day to the next. I'm a terrible procrastinator, and I have an unbelievably chaotic and confusing calendar, as anyone who's ever tried to have a meeting with me. Is Brittany here? Brittany, shout out. Brittany back there, it managed my entire life, without which I would absolutely die, so thank you, Brittany. And basically, I try to not take too many meetings in a day because I'm an introvert, and you remember Hugh's talk from day one of the conference. If I have too many meetings in a day, I'm absolutely, totally fried. And so I try to do a limited number of meetings, and then if I ever have extra energy left over, try to think or write, which of late, has not been happening. But when I was writing the book, it was total chaos. So I would sometimes spend the whole day doing nothing, feeling bad about myself, and just like feeling like I was accomplishing nothing, and then at like 4:35 p.m. be like, oh, I have an idea, and then like write 1,000 words and be like, hey, that was pretty cool. Where did that come from? I don't know. So yeah, so no productivity tips for me. I do not recommend this system, but somehow it works for me for some reason.
All right. Okay. Excellent. This is a perfect start. No advice for everybody.
Listen, I didn't write Getting Things Done. Okay, you should ask that guy for advice about how to get things done. I honestly do not.
Okay, so a lot of times the questions go from the minuscule, like what do you eat for breakfast, to the big picture, where do you see yourself in 5 years?
Now that is a hilarious question. Especially for the guy who's like, you can't make 5-year plans. I can't even make 5-month plans. I mean, if you think, so just to give you a sense of context, today we're doing this. Whatever it is that this is that I do for a living, we're doing it today. And 5 years ago, that was what, December of 2009, so I can even do math at 9 o'clock in the morning. In December 2009, I had just left InView, my startup, and I was just starting the process of thinking about, doing some blogging and, I don't know, I was like trying to figure out what was next, and I was like, oh, I know, I'll write some of these stories down and put them on a blog so people stop yelling at me after they meet with me and telling me that I'm crazy. I'm like, well, you can read the blog ahead of time and then you can cancel the meeting and think I'm crazy. Instead of yelling at me, that'll be a lot more efficient. This is my master plan. And, and I was just like, I need to come up with a term for how do I describe this crazy set of ideas, and I was like, maybe we'll call it Agile Startup, or this startup, or that startup. I was like, no, I think more, intellectually speaking, you should call it Lean Startup. So that was, the 2009 was the very first time I ever said the words Lean Startup out loud, let alone on stage in front of people, at a conference that Sarah was running at the time, ironically. And if you'd asked me then, what do you be doing in 5 years? Like, what are the odds I would have said this? I mean, absolutely not. If you went back in time and talked to myself at that time and said this is what was going to happen, I would have been horrified. So, yeah, 5-year plan, I don't know. What I try to focus on is, just taking it one step at a time. I know this is a marathon, not a sprint. This is going to be a long-term project to get people to adapt to, do work in a different way, like we talked about, ad nauseum over the conference. And I can't tell, I really have no sense for how many milestones there are to go, but I know we're making progress because I see the milestones that we've accomplished. So I just try to focus on, what's the next milestone that I want to try to accomplish, and then what are the parts of this that I do well versus what can other people do? In the early days when being a lean startup evangelist, was like me and some buddies. We kind of had to do everything, and this is true of any startup. When it's just you and maybe you and a co-founder, you just whatever needs to be done, you do it whether you're good at it or not. But as things grow, you have the opportunity to be reflective if you want, and say, well, what do I actually bring to the table? What can I do that's helpful, and what really should I leave to other people? And so, increasingly, I'm trying to feel like, well, what the consulting and the, and building the conference and kind of the like raw evangelism of Lean Startup and the education, the training, the academic programs, I'm not good at any of that stuff, really. That's not what I offer. And so trying to figure out, especially next year, like what am I actually, what am I good at? What has been my contribution to this so far? How do I spend more of my time doing that, maybe less of my time doing the other stuff? So anyway, that's, if that's what I'm doing 5 months from now, I'll be pretty pleased.
So when you say milestones, like what would the next milestone be?
Well, it's hard to be totally concrete about it. I have certain specific things I'm hoping to do and announce and launch next year, but I'm going to leave that for next year. In terms of the overall movement, what I look for is honestly, what are the questions I'm being asked, and what are the kind of inbound inquiries that I get? Like I can get my inbox is a very good barometer for kind of what is happening out there with Lean Startup, because I don't know, probably one person in 1,000 who either reads the book or hears about Lean Startup decides that they want to send me an email about it for some reason. So I get this kind of interesting sample of just people who discover, I was not joking the other day, that people who literally discovered Lean Startup yesterday. And they're like, hey, this thing is cool, and I get the emails from people who are like, Lean Startup is over, and we're sick and tired of it. And, nothing new has happened since Lean Startup started, and it's been so long, and it's like, this is 5 years, give me a break, How often do people have new big ideas? Like I don't have them very often. I don't know, maybe you guys come up with great, amazing, incredible, new world-changing ideas like every day, but that's not been my experience. So, I think about, we're starting to see these ideas cross over into really, truly mainstream applications. Really boring companies that do totally ordinary things adopting these ideas. Policymakers and governments, we're starting to see not just the hot Silicon Valley startups, which has always been our core strength, but the startup hubs in places all around the world. And some people travel a very long distance to be at the conference. We think of those as seeds that are being planted in other places that are not kind of Silicon Valleys, but have started to understand that entrepreneurship is critical for economic growth. So I think that's a pretty important milestone. It's just, we take it so for granted, those of us who are kind of in the movement and think about this for that. Like, of course, the movement should keep growing and more it should be adopted by more and more people in more and more places. But every time that happens, somebody took a real leap of faith to say, I think this thing could be helpful, and we should try it. I mean, that really struck me. I was so excited about the story, from Vox, where I don't know any of the Vox founders. They're very famous, important, influential Washington policy people, and they recognized they had this challenge and said, hey, what if we try to apply this to journalism and to news? And we take it for granted. Of course, what else would they do? Read some other jerk's book? Like, no way. But it's a tremendous leap of faith to say, I think, based on something I read in a book, that this could be a good idea, and we should give it a try. And so, I try not to take that for granted. And then, personally, the thing I'm working on that I think is really important, milestone-wise, is we have to get people to understand that rapid experimentation and all the fast stuff that we talk about in Lean Startup rests on a foundation of long-term thinking. It's a paradox for most people, but to me, it's very straightforward. There's no point, if you're just doing something small or short-term, you don't need to talk about doing it fast. It already is fast by its very nature. So just, you don't need to do an experiment, just do the thing. It's a small thing, go do it, enjoy it. And if you don't really care about where you're going, then a lot of the scientific method is really unnecessary. It's just go do whatever it takes to make some money and just keep doing it over and over again, and whatever, eventually you'll figure something out. You may find up, selling a psychic hotline or something, but if you don't care, you don't need Lean Startup. The reason why people gravitate to these set of ideas is we all have this idea that we want to make money, be successful, and have impact in a very, very specific and idiosyncratic way. We want to be successful at this thing because we think the world needs this thing. So most of us are engaged when we're doing this on a very long-term project. And those are the projects that really need the kind of rapid experimentation iteration that we offer. But when you start talking about systems thinking and long-term thinking philosophies and stuff like that, like a lot of people start to get bored. And it's like, it sounds abstract and kind of, wishy-washy. It's like, it just doesn't have the same kind of ring as minimum viable product. So I've been trying to think about how do we talk about lean startup and how do we become evangelists for this while also kind of being the carriers or the transmission vehicle for the underlying philosophy that makes it possible without becoming philosophers ourselves, if that makes sense.
No, tell us more.
See what happens? What I mean is most entrepreneurs are agents of long-term change, but no entrepreneur describes themselves that way. In fact, if you accuse them of doing that, a lot of them would be offended. Like, I'm not an agent of what, well, I'm an entrepreneur, I'm trying to make this, like, they don't want to talk about the things that they're doing. And in fact, one of the challenges we have as a conference is the most successful entrepreneurs that I know, and the ones who have been the most successful with Lean Startup are the least interested in talking about it. Some extremely powerful and extremely cool people who are doing amazing things, and I always respect their confidentiality because that's how they like it. They use Lean Startup every day in their work, but they never talk about it. I cannot get them on stage to talk about it. And it's not that they are embarrassed about it. It's that to them, it's no big deal. So I'll give you an example. I was talking to a founder of an extremely hot startup that you all know. And he was describing their deployment process. And they do continuous deployment, and it's world-class, exactly like we would want and I was like, could you please come on stage and talk about how you do that? And he's like, why? Because a lot of people could benefit from that. He's like, really? I don't think so. It's like, you must be not correct. I'm like, no, I do this for a living. I know for sure that there's a lot of people out there who are not doing continuous deployment, but they knew that you were doing it. They might give it a chance. That's a stupid reason. Like, I know, but human beings are not all as smart as you. So, and we were going back and forth, and I finally was like, well, tell me how you decided to do continuous deployment, because most people find this a very challenging concept to implement. And he's like, well, we were starting the company, and I read this blog post about it. And I said, oh yeah, that seems like a good idea. So we did it. That's his whole story. If he was to come on stage, that's all he could say. What about the resistance that you encountered? No, didn't have any resistance. Like, were there technical challenges? He's like, kinda, but not, it's like I want to come on. Could you come on stage and talk about how you breathe oxygen? And he's like, that's not. He doesn't have anything to say about it. He's a practitioner and he's doing it now. Now he doesn't know it, or he would never talk about things in the way that I talk about them. Like because he has adopted that system and considers it obvious. The traditional lean values of respect for people and continuous improvement, the long-term philosophy of creating sustainable value, like that, he's living all of those values and making them real in the world. And he's not that interested in talking about them because he's not a philosopher. He's an entrepreneur and he's busy doing things. But he has been influenced by the philosophy that we espouse. So I'm excited about that. I'm actually just as excited about that impact that we have as anybody that we put on stage, because what's important is doing the work, not necessarily talking about the work. Yet it's a conference, people come to talk about the work, so that's what we do. And there are people who are more philosophically inclined in the world and people who are less, and that is not, it's not A or B, it's not you're not an entrepreneur or a philosopher, it's a spectrum. And so when I think about as a movement, as we mature, we have to get more comfortable with that. We can't just go around spouting slogans like fail fast and whatnot. We have to understand that there is an underlying philosophy that we teach, and we have to figure out how do we help people have a realization of the importance of those values without becoming overly abstract about them. Does that make any more sense?
Yeah, okay, I appreciate that. One more question and then we'll get to all of your questions. So if you were just building a company today, you were going to build a new product, an app, anything, what would you build?
Oh, I am building it. It's not a secret, I don't talk about it that often. I'm trying to build a new stock exchange. So we call it the Long-Term Stock Exchange, or LTSE. Any LTSE people here? We've got a couple people I know at the conference, I'm not sure if they're in the room, but anyway, maybe they don't want to identify themselves, that's okay too. So we are building, the idea is to build a basically competitor to the current public markets system, where we would actually have incentives that foster long-term thinking instead of current short-term disaster that is our public equity system. I don't feel like in this room I have to explain why going public and the public markets are bad and why Wall Street has significant problems. If anyone's curious, we can talk about the Q&A. When I'm in New York, by the way, it's a very different conversation. But you know, if you really believe that short-term investing is a bad strategy and building a company only for the short term is a bad strategy, then you ought to be able to make more money by building a market where people who have a long-term philosophy can come together and trade. And so it's basically an alternate way for companies to go public with their real IPOs, but just not, you know, not in NYSE and NASDAQ. Go public on the LTSE, the trading rules are different, corporate governance rules are different, and the disclosure rules are different to really foster that long-term thinking. So that's that's an example of a project that's going to take freaking forever. So one of the things that we've done is, we made a commitment as a team that every time we could peel off a piece of that exchange and find something that would be useful in the present for entrepreneurs and companies that are going to go public in the future, we would just kind of split that off as a separate minimum viable product, if you will, and launch it. And so we've done a bunch of those, most of which have failed, but the most recent of which has been successful. And if you want to check it out, it's called captable.io. And I don't know how many of you keep your cap table in Excel and email it around on Gmail in the name of security. But it's actually a terrible, terrible system. You shouldn't have your cap table in Excel. You should not be emailing it around to people. It's extremely error prone and extremely insecure. So we have a completely free service that you can upload your cap table and keep it in a much more accurate way. Every time you make a change, we email the person who's affected and have them verify that you got the change right. And it's better than Excel in a million different ways. So at captable.io, you can check it out.
All right, that's the whole category of startups, better than Excel.
Yes.
In the entire world, you guys are in that. Okay, excellent. All right, so let's get this thing started. We have an entrepreneur who's going to kick us off here today. He's going to provide the model for here's what my startup is doing and here's the question. And hopefully that gives everybody a sense of the kinds of stuff we're hoping to talk about today. So Emmanuel, can I ask you to stand up? And we've got Chin with the microphone over here. So you can stay where you are, because it's too hard to move around the room. That's a pain. But Chin can move to you. Yes. Oh, you have a microphone. Look at that. Look, genius. Okay, magic. They just appear in the room. All right, so we're just going to ask you to describe the situation with your startup. And Eric doesn't know it, by the way. It's like a game show here. He did not get any preview on this. Describe the situation and the question you have for him.
Sure. I'm Emmanuel Lea. My sister and I we founded a company, StatInLineCaps.com. And our problem is that we're growing too fast. Right, so I can give you some background on that. The issue that we're having is last year we read the Lean Startup book. She came in with an idea, said, what do I do next? I said, well, let's try this MVP, build, measure, learn thing. She made the product, she tested it out, got 30 different responses, and everyone loved it. So the two of us, we worked at Amazon Fulfillment, we quit our jobs, we decided let's do this thing. So we built out about 1,000 units. To sell, we thought it'd take us 3 to 6 months to sell. We'd learn, we'd iterate, we'd test all the fancy things that we had just learned about in this book. We actually sold out all of them in 6 weeks. Before we could make more inventory, we had gotten 400 units on back order, and we were struggling to figure out how do we manufacture, how do we ship, how do we fulfill, handle all the myriad tasks with just 2 of us. So my question is, once you've kind of figured out the MVP and you've moved through, you've got some product fit going on, and you're trying to figure out market fit and scaling and all those things, stickiness, virality, how do you scale the internal team and find the right advisors for your stage to help you with this rapid growth? Not to go crazy and blow it.
Yeah.
I'm going to jump in just one second. We do have a model for the satin line caps here.
Oh, yeah.
So I think we should stand up so we can all see what we're talking about. The product, the lovely, yes, there we go. And what you can't see is inside, it's satin. Okay.
Okay, that's good product placement right there.
Thank you.
Hey, and congratulations on your success. A lot of people were like looking daggers at you, by the way. It's like, he's growing too fast. Yeah, boo-hoo for that guy. He definitely needs the help in this room. But I'm excited because these are the kind of problems we love to talk about. So many people are like, oh, the dog ate my MVP. What should I do? This is like, hey, it actually works. So first of all, congratulations. And second of all, you should be afraid, very afraid, because as you are probably starting to realize, entrepreneurship is in some ways like a video game where whenever you level up, the reward is you get to fight the big boss. And then like in the next level, the guy who used to be the big boss is now the regular grunt fight that you have to fight, and there's now a new big boss. He said that most video games are well designed to keep you in flow the whole time so that it's enjoyable, because you get more powers as you go, and also they end at a certain point and you have a sense of accomplishment. So entrepreneurship is like a game where you have only one life. The bosses get exponentially more difficult with no sense of design, and it doesn't ever end. Your reward for having accomplished one impossible goal is to now have to do a new impossible goal that's 10 times harder. So it kind of totally sucks. But you already, and hopefully you already know that. If someone didn't get the memo about that because they only saw entrepreneurship in a movie, like, you can still bail out now, it's not too late. So a lot of the things that you need to know, you're right to be thinking you gotta talk to people who've been through it before. You wanna, get connected with advisors, and that's part of the magic of being in a startup hub like Silicon Valley is that, as you start to get success, you're able to access those folks, and that's more of an inside baseball kind of thing. So I don't know if people are interested, you can ask more questions about that. The thing that I would focus on is the danger that I see people who are in the situation you're in run into is they assume that they've achieved product market fit because his first experiment went really well. And that's extremely dangerous. Because let's say the total available market for satin line caps is like 1,001 people. And so, but they love these hats. So you could have sold every hat you're gonna sell. And I guess you have 400 back orders, so maybe it's 1,401. But there's no evidence necessarily that the market is super large and that this is gonna keep happening indefinitely. And it's not obvious, this is kind of odd to say, but it's not obvious either that the people who bought these hats from you were buying hats from you. I know that sounds totally insane. Like, see, he said in the morning he can't think, and now look what's happening. But you don't yet know what it was about the marketing of the product, the benefits that you promised, the experience of buying from you. Like, you don't yet understand why people wanted to have them. It wasn't, by the way, because they're really comfy. Because nobody tried the hat before they bought it. Is that right? Yeah. So, what's up with that? Why are people buying a comfy hat that they've never put on their head? Like, so what is it about it that it makes it people want to have it? So there's a huge amount of stuff that you don't know, that you can't possibly know from one experiment. And usually when I'm giving the lecture about not relying on one experiment, usually it's somebody who comes in and said, I did an MVP and I got no clicks, and so I'm giving up on my idea. It's like, well, listen, just because, classic one, we see this a lot in boot camps and workshops and stuff. People will create a landing page. They put the landing page up and they drive some traffic to it, and they say, okay, customers click on my thing and I'll find out how many people like it. And they get a 0% click-through rate. And sometimes, as it was for me the first time I did this, it's because the value proposition is so bad, literally nobody would ever click on it, and you could pay people to click on it and they still wouldn't do it. And sometimes it's because there's a JavaScript error on the form. And a lot of people clicked the button, but the button didn't work, and so people didn't get to page 2. So you never quite know what caused the result that you saw. That's true whether it's a failure or a success. So the number one piece of advice I have to you is don't go from 1,000 hats to 1,000,000 hats. Don't be like, hey, experimental learning phase is done. In fact, Bill Gross fell into this trap. I don't know if you saw this when he talked about Cards Direct. When we talk about successful MVPs, we sometimes talk about you did the initial experiment, it was a success, you took it down, and then you went back in the cave, built out for 18 months, and then you launched a new thing and everything was great. Even when we talk about it that way, it's rarely what actually happened. There's usually a lot of things that happen in between. Don't think about product market fit and experimentation as an individual event that you do one time. Try to think about this as a flow, a rate of flow. So you thought you would sell 1,000 hats in 6 months, you sold 1,000 hats in 6 weeks. So that establishes a rate. It's, I was about to express it in hats per month, and I realized I can't do that kind of math this early, so I don't know. But think about a certain number of customers, a certain target you have per unit time, per week, per month, per whatever. And if you think it's going well and you're getting closer to product market fit, try to increase that rate of flow a little bit. And depending on the production process you use, the increments with which you can increase are going to be different. The nice thing about software on the web is we generally have a nice continuous, smooth path to scale. So if you're buying traffic on Google AdWords, it's the same process to buy 10 customers as 1,000 as 10,000. But in the manufacturing and distribution of physical products, there's lot sizes and batches, and there's a lot of complexity to it. So maybe you can't go from 1,000 to 1,500. Maybe you have to go from doing 1,000 hats at a time to doing 3,000 hats at a time, or I don't know. But try not to go a crazy, crazy 2 order of magnitude jump. Try to make it a more continuous process. And then decouple your customer acquisition process from your production process. Don't feel bad about having a ridiculous backlog or waiting list. That's actually okay. In fact, a lot of customers think it's cool that something is of limited availability because it must be really popular if it's sold out. You know what I'm saying? So think about the flow in which you want to be signing up new customers, and do you want that to continue to be 1,000 a month? Do you think you're ready to go to 1,500 a month? every time you increase the rate of flow, stuff will start to break about your current process. You'll be like, oh, wait a minute, we don't understand our customers well enough to know where to get 1,500 customers. So, we're classic like crossing the chasm issue. We got the early adopters, but what do the mainstream customers look like? And so be prepared to live at each level of flow until you have enough validation to take it to the next level. And one more thing, don't be afraid to go back a step if you screw up. So a very common thing is you sold 1,000 hats and you're like, we're ready to sell 10,000, this is gonna be awesome. You print your batch size of 10,000, you're like, okay, here we go, let's sell our 10,000 hats, and you sell 500. You're like, I can't understand it. How could the new one have been worse than the old one? Well, usually, as you increase in scale, you have to make compromises you didn't have to make in the more concierge type product. So maybe the product's not as good when you do it in a larger batch size. Maybe your marketing was really good, but now you kind of let it slip. Like, you never quite know. So if you're selling hats 1,000 at a time, and you go to 10,000 at a time, and it's not going well, don't be like, well, the company's over. Just go back to 1,000. And if that fails, go back to 500. Like, think it as a spigot that can go up and down, so that the amount of work that you're doing is matched to the level of learning that you're getting. Any of that make sense?
Yes.
Is that helpful? All right.
I have a couple follow-up questions.
Sure.
So, you said as you're getting closer to product market fit,
Yeah.
and a lot of us would think, well, isn't this evidence already? Well, what would you call product market fit if you're seeing sales that are way beyond what you expected?
Yeah, well, way beyond what you're expected is not a definition of product market fit, because maybe your expectations were just really low. Right? So like people who are kind of depressive, like negative about things, are like, well, I'm only going to sell one hat, and it's like, wow, I sold 1,000 hats, that's awesome, but that's like totally irrelevant. Like that just has to do with how good your expectations are, and like you don't get bonus points. I don't know if people know this, but in school, like if you call your shot and you hit it, if you say you're going to do something and you did it, in regular management, this is true too. Like you get bonus points for having predicted what you were going to do in the future and being like. In entrepreneurship, you don't get any gold star because you knew what was going to happen in advance. You only get a gold star for delivering results for customers. So I happen to have a very complicated and not that popular view on what product market fit constitutes. I really believe in innovation accounting. That's why I've devoted an ungodly section of my book, to that topic. Don't ever get questions about it, so I'm not even sure if people read those chapters or not, so I don't know. But I really believe, and I said it in the book, product market fit has a specific and mathematical definition. If you guys want, we could go through the math, but it's early in the morning and that's kind of cruel, so you decide. So I would not call what you have described product market fit at all. And I don't buy into the would you disappoint or net promoter score, kind of customer satisfaction definition of product market fit either. To me, product market fit is when you have quantitative evidence of two things, what we call the value hypothesis, which is does your product delight customers? What's the evidence that it does? People buying your hat is not sufficient for me. I want to know that they actually like it, that they actually wear it. If the model requires word of mouth growth, that that's present. And the second thing is the growth hypothesis, which is given that we got one customer who likes our product, how do we get more? I think each of those hypotheses can be modeled mathematically, and there's a certain specific definition of what we call the engine of growth turning fast enough to constitute product market fit. I'm happy to work it. I'm happy to work it through in this example, but I want to be respectful of those who find math painful. I don't know. We want to go down that road, but yeah, I would personally, if it was me, want to say, mathematically speaking, what does product market fit look like? Make that the 100-yard line and say, what yard line am I on now, and am I making progress towards that goal as I go batch by batch, customer by customer, cohort by cohort.
Okay, without spending a ton of time on it, can we get the 3-minute? Can we model it out so people understand? Because either they are, if no one's asking you questions, either they aren't reading that part of the book, so we're going to just provide a service here by helping everybody understand, or they're reading it and they're not understanding. So we're going to help everybody either way.
Okay, that's fine. If you want to walk out, I won't be offended. It's accounting and there's coffee outside. I get it. Listen, I don't find accounting interesting either. I'm not interested in this topic at all, except that I don't believe we can be successful at the things we are interested in if we don't master these accounting basics. So I'll just walk it through in this particular example in as short a version as I can. I believe in what's called the law of sustainable growth, which happens when new customers come from the actions of past customers. That's what defines an engine of growth. So how can new customers come from the actions of past customers? Well, there's only three ways I've found out. Through viral growth, where customer acquisition happens as a natural side effect of using the product. You cannot use PayPal or Facebook. Certain products you can't use without accidentally inviting other people into the product. That's viral transmission, by the way, not word of mouth transmission. Word of mouth is optional, but viruses are not. You may have noticed it's been in the news lately. There's the sticky engine of growth, which is for products with long-term retention, which are either addictive or have lock-in, or some reason why people do them over and over again. And then the third, which is the paid engine of growth, which is where past customers give you money, you use that money to acquire new customers, and the rate at which you grow is the difference between those two values. Does that make sense? 3 engines of growth. We'll talk about the paid engine of growth, which I assume is what we're talking about here. In retail, that's usually how it works. You take in money from customers, you buy advertising to get more customers, and as long as you can, you have kind of positive margin on each customer, then you can afford to buy more customers. The problem with buying traffic or buying customers, and this is true whether we're talking about foot traffic in a retail location or Google AdWords or any situation when you're bidding on people's attention as an advertiser, is that because we live in a competitive marketplace, in general, the cost to acquire a customer gets bid up to the average marginal profit of everybody in that category. So if you want it, if you've got a great idea for a store, you're like, oh, I know, I will go to a heavily trafficked retail location like, Madison Avenue, or go to some I don't know what the equivalent is here in San Francisco, but we're gonna go to a street with a huge amount of foot traffic, and that's gonna be awesome because, my chocolate store, we make 3 cents per chocolate, and we have great, we have great 1% gross margins, it's gonna be amazing. You'd be like, but for some reason it's all diamond stores in this, jewelry stores in this street, you're gonna have a problem. And it's not that if someone gave you a storefront on that street for free, you couldn't make money. That's the equivalent of being ramen profitable, right? If you didn't take any salaries and had no personnel costs, it's not that hard to build a profitable business. But you don't get to have a storefront in Union Square for free. You have to pay the rent. Well, what determines the rent in a place like Union Square? It's, well, who can afford to, you understand what I'm saying? So the price gets bid up. You want to go sell Viagra online or something? Go to Google AdWords. You can do this math. Go plug in, what does it cost to advertise on that keyword? Certain keywords are more expensive than others. Why? Because the people who use those keywords, the people that do personal injury lawsuits and class action suits for obscure diseases, to bid on the names of those diseases is unbelievably expensive because the customers who are acquired through those channels are incredibly valuable to those businesses. So, if you want to have a working engine of growth, in the paid engine of growth, you have to have margin per customer that is greater than the cost to acquire customers through whatever channel you're using. And that means you have to have a differentiated ability to profit from a customer more than other people who are trying to sell the same thing. Now, guess how much I know about the hats business? Yeah, that's everything. Nothing. Zero. The blank pause between the question and the answer is everything I know. So I have no idea if what I'm about to say is remotely true. But I'm just going to imagine, I'm just going to start making stuff up about your business, and you can tell me I'm completely wrong, and that's totally, I will not be offended anyway. But imagine that you have a marketing plan to sell hats by bidding on the keyword in Google, hat. This is I'm great chief marketing officer. That's my very creative and avant-garde idea. It's people can type in hat, and you're going to have a great picture of the hat right there in an ad. It's going to be awesome. They want to buy your hat. So the question is, can you get your engine of growth to turn? Which is, can you acquire customers for less than the money you make per customer that you acquire? So there's math to that, right? It's okay, how many impressions do you get per ad? What is the click-through rate per ad? What is the conversion rate from click to purchase? And then you get to discount by whatever word-of-mouth effects you get. So if 5% of customers also bring another customer in, that's slightly you get that as a free discount on your cost of customer acquisition. Everyone follow me so far? Okay. So here's the question that matters for your engine of growth. How much more profitable are your hats, people trying to buy hats, than other people selling hats? I have no idea. How much money do you make on a hat? I don't know. I've never bought a hat in my life. How much what is the margin in the hat business? But I know nothing about it. But I do know that whatever your plan is, whatever your growth hypothesis is, it has to work out mathematically. And then we have a very clear product market fit definition, which is, I've built this business plan. I'm assuming you have a business plan somewhere. And it's got a spreadsheet in it, right? And the spreadsheet has some reason why 5 years from now you're going to make a lot of money. Right, there's a graph. I know what this graph looks like, although I don't know what the numbers are because I don't know where you live. If I knew what zip code you lived in, I probably could figure out even what the numbers are because it's a regional thing. Do you have to promise $100 million in 5 years, or can you get away with $50 million, or it has to be $1 billion, whatever, We're in a very expensive zip code, business plan-wise, at the moment. So that plan says we're going to grow this much by this time. And I hope the plan is modeled around one of these engines of growth. If it's not, you might want to redo this with Excel. But if it's modeled around this engine of growth, you can say, look, because we think we have a 10% customer acquisition margin, So it costs us $3 to acquire a customer, but we make $3.30, or whatever it says in the business plan. That's your definition of product market fit. And today, my guess is, I wouldn't be surprised if the first 1,000 hats, you didn't pay any customer acquisition costs because you had some clever, growth hack to avoid that problem. So today, everything's looking great, but as you start to do more and more experiments, you'll have to start to discover what your actual cost of acquisition will be. And it wouldn't be that uncommon. A lot of the startups I work with have this problem, where they basically discover that their product is exactly as profitable as every other product in the market that they're trying to displace. So it's better in many ways, but it doesn't have any engine of growth because all the money you make from selling this product, you have to give away to the customer acquisition source, which is why Google and Facebook are two of the world's biggest companies. Because they don't care. Google doesn't care who wins in a certain category. They every time someone buys a product, they make the same amount of money and they're perfectly happy and they can care if you live or die. So let's say you find yourself in that situation, you don't have product market fit, and you got to figure out how to get product market fit. And now, but I hope this whole framework, the reason we went through this mathematical exercise, it takes the hard problem of how do I get product market fit, transforms it into two much easier problems, which is how do I lower my cost of customer acquisition, or how do I increase my profit per customer? And then we can start to figure out what is the optimal pricing for this hat, and what is the better marketing. And if we get an unbelievable celebrity endorsement for this product, will that allow us to charge a 10x premium for it? Is that worth how much it would cost to call so-and-so's agent? I was about to name a celebrity, and I was like, I'm not cool enough to know who to even use as an example here, so someone help me out. I have no idea. So those are the kind of questions we can start to talk. Or we can say, do we have an innovative, sustainable customer acquisition strategy? Now I'm just going to give one last example of what not to do. Most people who think they have a customer acquisition problem, who do the analysis we just talked about, are like, excellent, I'll do some PR. But PR is the classic example of something that violates the law of sustainable growth. Because except in very rare businesses, there are a couple, but there's very few businesses where the amount of PR you can get for your company, and therefore the amount of customer acquisition you can get, is a function of the size of your customer base. So it doesn't have that kind of cycling effect where each round of customers helps you get more. It's just a one-time thing. So you can be like, oh, we can do a big PR blast and get 1,000 customers. That's awesome. But then how will I get the next 1,000 customers and the next after that? So, think about, when we talk about the customer acquisition strategies, what's a sustainable customer acquisition strategy that can work day in and day out? That's where things like that's the reason why Google AdWords and Facebook ads and retail locations and storefronts, that's why they're so valuable. All right, that is your very quick primer in the mathematics of product market fit. Wasn't it boring?
And I'm assuming that Emmanuel just wants to go back to his job.
I know, right? Well, yeah, exactly. Now this is, I tell you, you deal with the big boss and you think this is bad. All right, good. Yeah, see, that's why entrepreneurs are awesome, is that they're crazy. The more difficult, the more excited they're like, yeah, if it was easy, everyone would do it. I hate class. It's like, don't get old people together. Remember that Monty Python skit? It's like, well, when I was a kid, we had to walk to school both ways uphill in the snow. It's like, oh yeah, well, we had, Tyrannosaurus Rex trying to kill us while we did it. Oh yeah, I had to do it, on crutches. And then it's like, yeah, somehow we get excited about the difficulty of it in that thing. And I was joking yesterday about the power outage. Like, remember people were like, yeah, it just helps us prove that we're hardcore. Actually, it was like a plus, a bonus. I was like, can we arrange a power outage next year? Yeah. Is that a feature you could get from the hotel? Anyway, so yeah. But thank you for your question, and thanks for persevering through this, and I'm glad you found the book helpful.
Yeah, and I'm going to add one thing to what you said. Just to wrap around, you started off by saying, you sold 1,000 hats, we don't know why. And at the end, you're talking about, we need to acquire customers at a pretty rapid clip, and the way that you're going to figure out how to do that is by really understanding the customers, which is not where you are right now, right? In fact, one of the things that you had told me earlier is that you guys had a real hypothesis about who was going to buy them, and it turned out to be a completely different group of people, and you don't really understand the new group that well yet. So a really interesting piece of this is when we're thinking about customer acquisition is really understanding the customers and getting in there and talking to some folks. All right.
Metrics are people too. Everyone remembers that from the book. I wasn't kidding. That's really important.
Yeah, talk to the folks. All right. So let's get a next question, and I would love if somebody has a question either that is about product market fit or where you have the opposite problem that Emmanuel has, the problem where you have an amazing idea and somehow it's not catching on. So we're going to do this by raising hands and then have mics coming to you. So who's got product market fit or the exact opposite of product market fit? Anyone? Nobody came here with that?
Nobody wants to raise their hand and be like, my startup sucks.
All right, brave soul over here on the window. Nick, thank you so much for delivering the mic.
Thank you. What do you want me to say?
Okay, so we want to know, what is the situation with your startup? Just tell us a very little bit about your startup and your specific question around it.
Sure, my apologies for some of the other small groups where I talked about this before. So I'm a part of an internal startup. We have a hypothesis that some of our best customers want a way to store their digital documents in a highly secure way. They think that Dropbox and Google Drive are great for a whole variety of things, but things that have to do with their money, things that have to do with their health, things that have to do with like their wills and trusts and inheritance, they say, I don't feel safe and I want a product to make me feel safe. So we created a secure product that anybody can use. It's free, and it's out today. And we have about 3,000 customers, but only about 200 of that 3,000 are really active users. And so we are now trying to figure out, did we succeed? Did we fail? Is it worth, do we have product market fit? We started to call our best customers and talk to them. And of course our best customers love it and we learned why they love it. But we don't really know if that helps us figure out, are there more customers like that in the world, or have we found the only 200?
What's your question?
Oh, what's the most intelligent way for us to go about trying to figure out the size of the market so that we don't overinvest in this idea if it's actually small?
You're gonna think this question is crazy, but let me ask you a question. Why do you care about the size of the market?
It costs us a certain amount of money per year to keep this product running, and we want to stay in business. So right now we have a large cost of free product.
So you're losing money per customer, making it up in volume?
At the moment, we're just losing money.
Period, yeah. Listen, I'm trying to be serious about it, yeah. You don't care about the size of the market. You're losing money, and you don't want to lose money anymore. That's a really different question. So which is it?
So that gets a little complicated. Because we're a startup within a larger business,
Uh-huh.
we have a very profitable core business. We think that this product will keep people with us for life.
Uh-huh.
We handle financial services, and our growth, or our value hypothesis is that if our valuable customers, small or large, have money with us, and we provide this service to keep their wills and their trusts organized in one place,
Yep.
if anything happens to them and they pass an inheritance to their family, our product will help that family handle that transition in a very
I would
easy
love
way.
that product. I have that problem. Yeah.
Well, good to hear.
Yeah.
So our hypothesis.
So you're set. So do you have product market fit?
Glad I came to the conference.
Yeah, I mean, this is so funny. It's like, I love the question about, do I have product market fit? It's okay, and I'm not picking on you, for your sake, but for everybody else's sake. So, thank you. Exactly right. The meetings will continue until morale improves. No, but for everybody else, I mean, I get this question, and I'm not picking on you. It's very common. People ask me, do I have product market fit? And I don't even have to listen to the rest of the question. If you're asking the question, do I have product market fit? We already know that the answer is no. And first of all, and I'm always like, why are you even asking the question? Let's say I said you had product market fit. What would you differently? How would that help you in any way? You go back to your team. Eric says we have product market fit, but the mathematics don't support the growth we were just talking about. Like, who cares what some asshole said about whether I have product market fit or not? But in any event, the reason I know you don't have it is people who have product market fit don't have time to ask questions about whether they have product market fit. If you've ever lived through the actual experience of product market fit, you would know that like the only thing you have time for is the like desperate attempt to keep up with the volume of customers that you have. You don't have time for anything else. It is like all consuming. And more importantly, it's really, really obvious. So it's actually what, like, if you read the original like Mark Andreessen blog post about product market fit, he's like, how will you know when you have product market fit? Like, you'll know it when you see it. And even moving on to my other thoughts about product market fit, I remember I was an entrepreneur at the time, I was like, that is the least helpful advice I ever saw in my whole life.
Also because it feels like that to Manuel. All they can do right now is try to keep up with the demand.
Right, yeah, no, it feels that way. So that's, my whole thing is like startup advice based on how it feels isn't good because that's awfully subjective. And startup people are crazy, as we've been talking about, so they feel a lot of weird things, That's not super helpful. So let's try to get more rigorous. Now, the internal startup with a profitable core business trying to improve customer retention in the core, but get credit for it in the startup is a pattern I see a lot, and it is a tough one. Because here's the problem. Your business is going well, core business is doing well, am I right? Yeah. So when the core business does better, who's gonna get credit for that? These weird guys off doing this internal startup, or the people that are like managing and running the core business. They're like, we made the core business better, we're awesome. And if the core business does worse, who's gonna get blamed for it? Hey, these weird guys are not rolling with the rest of us, They must be to blame. So you really put yourself in a situation that's very, very challenging. Now, it's not intellectually challenging though. If your value hypothesis fundamentally is that the company will have better customer retention for customers that use this service than that don't. It's not that hard to measure. You just have to be willing to do honest to God split tests and measure the customer retention. And if customer retention, I can imagine a product like this, maybe people don't churn out of the product for 5 years, so customer retention is already really long. Then you gotta say, okay, well, what are the leading indicators of customer retention and have we improved that? So that's where customer satisfaction scores and other kinds of proxy metrics can come in handy, and we can talk about that. But the critical thing is you gotta quantify for the core business, how much is a 1% lift in customer retention worth to the company, really? And then, so is it really worth X dollars? If so, then I want you to be willing to pay up to X dollars to support me for every customer that I do this for. Instead of forcing me to go charge customers X dollars extra, as an upsell. So if you can get that agreement with the core business, then you can right size what you're doing. Because you can say, well, we know what it's worth to have these, to provide this service for customers, and we know what it costs, and if that number is positive, it's high ROI for the company, and if it's not, then we really shouldn't be doing it. And then you can work on, over time, showing progress against that. So now you have kind of clear metrics you can use if you can get agreement with the core business. Look, our goal is to increase the number of customers that we have this positive impact for, and to make our operations efficient enough that we can service this business on this right per customer cost. And that's why I was asking you about if you really care about size of market. As long as you're profitable on a per customer basis, does it really matter if you have 10, 100, 1,000, or 10,000 customers from the core business point of view? If that's 10 customers you wouldn't have had otherwise, it should still be considered a win within the company. But how are you going to feel if we this business is for 100 customers? Maybe you're going to feel kind of lame. Because wow, I spent my life building this product, it's only useful for 100 customers. So my guess is that there's a hidden third metric somewhere in here that is about your desire to have a bigger impact in the world, or your belief that this matters for more than the impact you're seeing so far. And I want to make sure everybody gets a chance to ask questions, so we won't do the psychoanalysis right now and get you on the therapist couch and say but the question I really want to ask you is why on earth are you spending your precious time and energy on this thing instead of something else? And people come to me with advice about metrics all the time, and they're so surprised how frequently the conversation turns to vision and personal motivation. But honestly, I really feel like it's a conversation that needs to be had here. Is if you have some visceral feeling that this could be huge for the world in some way, if only something could happen, then I think it's important even if you can't get the core business to pay attention or care about that, for you yourself to have a model of what that's supposed to look like, so you can be testing and validating the assumptions that have to be true for that bigger thing to happen. And then everything I just said about getting the core business to invest in this up to a profitable curve, that just becomes the way that you keep your startup alive until you can demonstrate the bigger impact. And the nice thing about corporations is that they don't mind a bait and switch if the switch is better than the bait. Right, so if you're like, listen, I was going to make you $1 million, but but I accidentally made you $10 million instead. You don't get fired for that. That's okay. People will retroactively remember that you promised them $10 million and that was their idea. That people will instantly retroactively take credit for whatever you do, and you'll be fine. So don't worry about that. Worry about am I actually doing experiments that can help me understand whether that bigger thing is even possible, and then can we define for your team product market fit in terms of the thing you really care about instead of this bullshit thing that the rest of the company cares about. Fair?
All right, so first I just want to acknowledge people standing in the back. We're going to have a break in about a half hour, and we'll bring in more chairs for you. There are 2 chairs over here, so if we've got anybody who's just dying back there, come on down.
It'll be Lord of the Flies in here pretty soon.
It gets a little tense. All right, so let's see, do we have anybody else who has an internal startup problem that you're dealing with? Yeah, in the back. Let's see, we lost Jen. Great, thank you. We'll put more chairs in here. That'll get easier.
Somebody came up to me to pitch me a microphone that you can actually throw. It's like in a little beanbag thing that's throwable. Did that seem like it would solve this problem or not?
No, I hate that idea. You get hit with a microphone in the middle of a conference. Nobody wants that.
And you've got microphone and face problem.
Yeah, that is a different kind of product market fit.
So work with Intuit. We're doing internal disruption teams, right? We want to cripple our business.
so nobody else does it. So it's kind of wargaming. The problem that we run around is that the people who sponsor these teams, right? We're an innovative company, right? But some of the leaders don't quite understand that they need to shift their perspectives from delivering business impact, aka crippling the business, versus all these learnings. And so they try to wargame too early, and they'll try to project on what these might be in 3 years. So I think it's a common problem. The question is, how do we kind of defend that back and help us stay core to our values, right? For what we're trying to do to be lean. Because when we learn and then we go into a build cycle, that's when all this mental tinkering starts taking place. So we're really struggling with how to kind of hold back leaders and let them understand, like, hey, this is just a marination process, not like an execution process, longer term.
So am I getting this right? You do this kind of like war game scenario with the leaders. You come up with a potentially disruptive idea. You go to build it or to test it out or do some learning around it, and then they start meddling in the development process and loading it up with extra features. Or like, give me a sense of concretely what does it mean?
Yeah, no, a little bit on the reverse side, right? So we start with just a grand challenge, which is, hey, go cripple TurboTax. And so we're like, all right, fantastic. So what does that mean? So we do a couple different ways. As the team, we start running experiments, start getting some mild traction. And once we start going, we're like, hey, so we're getting some smoke signals, this might be something.
Yeah.
So we're gonna keep running experiments, so on and so forth, but they take that as, oh, this is something, start doing all of their NBA projections on top of it.
Oh, I see.
It's really, really distracting.
And do they start running teams to build the thing that you learned about, or what's a specific thing that they do that's harmful?
So the specific thing is that they try to then convince us to become that team, right? So they're like, oh, no, just keep going, and then when it's there, like, here, just build this, and so they'll start taking assumptions as solid concrete.
I see.
Well, we're going to continue to test that. And I'm like, well, that's awesome, but deliver it by January 15th.
Yeah, well, we talked about this a little bit in one of the interviews yesterday, which is just like, there's something about corporate America that's like, we like to go from, that is a horrible idea and it's never going to happen, and I will not put any resources against it, to, why didn't it happen yesterday, and I want all hands on deck, and everybody, and it's like, I want to underinvest or overinvest, but I certainly don't want to right invest. Absolutely not. I don't want to do anything incremental. I want it to be like off my radar, or the only important thing. That it's something very human about it. I like to joke that if you're a general manager in an established company, and you're trying to make the quarter, right? Fundamentally, we live in a world, I was just talking about long-term, short-term incentives. Like, companies exist to make the quarter. They have very short-term targets, and everyone's like really focused on that. So your boss comes to you and says, "Hey, are we going to make the quarter?" And you say, "It's a tough year. I don't know. But like, don't worry, boss. We got all hands on deck." People love to say that. It sounds so good, because it's like, you imagine the day after the quarter closes, you're like, oh, we almost made it, but listen, we did absolutely everything possible. We killed ourselves to try to make it, all hands on deck, all rowing in the same direction, and it's like, please don't fire me. And like, people generally, if they could say that, they can at least buy themselves another chance. Now, run that same scenario forward where you're like, boss, we've got almost all hands on deck. It just doesn't have the same ring to it, right? It's like, we mostly are trying to make the quarter. It's just a human thing. It's like most. How much most? It's 99%. It's like, why is it 100%? Human beings love all or nothing, and the real world is continuous. And so we just keep making these mistakes over and over again. I like to think about, I don't know how much you guys have ever thought from the perspective of a senior leader. This is true, by the way, in growing startups as well as in established companies. We're always like, leaders need to invest in innovation. Leaders need to do this, but like, that means if you're going to have 1% of your budget, or God forbid, 10% of your budget allocated to innovation, that is explicitly 10% of your budget that is not going to making the quarter. So you are the one who has to go into every leader has a boss, right? So like they go to their leader and say, we have most hands on deck, boss. And like, listen, when you're in a hyper-growth business and everything's going well, whatever, easy. But like, you have one bad quarter, like, it's really tough. We missed our quarter, we missed our target, we had bad things happen, but don't worry, we had almost everybody working on it. It's grim. So I have a concern though with this disruption team, which is so there's two things that are bothering me. One is what you're talking about, which is you have an initial signal and the leaders want to jump to the conclusion and be like, it's done. And I'll tell you a story. I was doing a workshop for a big company, and one of the internal startup teams had this idea. I guess it doesn't matter what the idea was, but they wanted to try a radically different sales process for something that, from the point of view of inside the company, they were really nervous that people in the company would be like, not good. And at the end of this workshop, the way I like to do these transformations is the team presents to their executive sponsor, a proposed plan. They say, listen, if you'll give us the following kinds of support, we will promise you to work in this new way and do this new plan and deliver these kind of results. And it's kind of the leader can take it or leave it. So they were really afraid that they presented this new radical different sales thing, the leader would basically fire them on the spot. So that's how bad of an idea they were worried it would be seen as. And I worked hard to say, listen, what I want you to say to the leader is, look, we don't know whether this is going to work or not, but here's a very well-defined experiment that is low cost, low risk of failure. All the things people talked about yesterday in their talks, from Google and Adobe. I mean, we've heard about this a lot, right? You set up the cost of failure as well contained. You make sure the parent organization is safe from the disruption. You got a dedicated, limited reach. Anyway, they did it all right. So they go to give the presentation to the senior leader, and I'll remember this like it was yesterday. He actually had to interrupt his vacation to do this meeting with them. So he's like in a Hawaiian t-shirt, like not at all pleased to having to be doing this stupid thing. And they're like, hey boss, here's this idea, here's the new thing. And he was like, really like grim face. He was like, that is a great idea. I want all of our salespeople doing that tomorrow. Like totally opposite problem what they're expecting. Exactly what you're living in. It's like, that is such a good idea. That says me right now in this meeting in my Hawaiian t-shirt. Like, I want to go all in on it. I don't want to just do this experimental prep. Like, this company has a very large sales force. He was about to undertake an unbelievable millions of dollars of cost in training and like take an ludicrous risk. But he's, tough, modern general man. He's not afraid. He's got balls. He'll, do the whatever. Like, he was happy to do it. It was like, okay, let's go, take the hill. And it was like, and I was watching them being like, are they going to do it? Or are they going to, they're going to cave? And they said, look, boss, before when we thought you thought this was a bad idea, what we were going to say was, hey, we've got this smart experimental plan to go find it if it's actually a good idea and roll it out incrementally. Now that we know that you think it's the most amazing idea ever, we'd like you to take this experimental approach, the smart thing to go test. It's like, what does it matter? It doesn't matter what I think of the idea. It doesn't matter, frankly, with all due respect to you, big boss man. It doesn't matter what you think of the idea either. It matters what do our customers think of the idea and doesn't actually do the thing. And the boss in his Hawaiian t-shirt wasn't exactly thrilled with that answer at first because he felt a little bit like, how dare you? But then, like, as he thought about it more, and I got the chance to debrief with him afterwards, he was actually really impressed. Because we sometimes forget that the people who are in these positions of authority and seniority, they kind of know that they have people around them who tell them yes all the time. Like, they kind of like it. It's fun. Like, it's actually nice to have people who always tell you how brilliant you are. Like, there's something really good about it. But, like, there's also something kind of gross about it. And they are aware that that's happening, and they are aware of the fact that that doesn't necessarily lead to best outcomes, even if they don't necessarily want to admit that. So having someone who's going to stand up to them and not just say, like, I'm a petulant child and I'm saying no because I can. Someone say, listen, boss, I really thought this through, and here is the right kind of experiment to do, and here's the next level thing that we ought to do. This is the next most risky thing we want to take care of. I have seen the most unpleasant bosses and the people who are considered the most antagonistic to innovation, like, actually go along with that. Because it's a very rigorous approach. And this is, I think, the thing that a lot of innovation and disruption teams miss. You've got to be able to do the math and really have thought through, why should, as your boss, why the hell should I care about this learning thing? Who gives a shit? Like, really, I can't quote the annual report and be like, Wall Street, we have this great learning. The dividend this year will be denominated in learnings. Like, it doesn't work that way. You actually get fired in a heartbeat and nobody cares. You got to be able to say, this is why this learning is valuable, and why it makes sense, and it's a smart risk for us to do the next thing and the next thing and the next thing. So that would be the conversation I would urge you to have with those leaders. But I have a complaint about your question. I don't know if I like this disruption team concept in the first place. Because here's what I'm worried about, and what I think is getting you in trouble, and I'm just trying to, like, on the fly, come up with a good solution, and I'm having a hard time, which is, what they're asking you to do to become the team in question, it's kind of smart. Because what's the alternative? You guys are going to learn something and then hand it off to another team? I think handoffs are the absolute devil. Yeah. I spend all my days talking I'm in siloed organizations that work in the traditional way. The killer of all innovation is that, whatever is learned in one silo is handed off to the next silo where it is lost. So we got to fix that if you're going to fix a problem that you're having. The closest model I can think of, now, I guess if it was up to me, the way I would do it, not to say that's the best way, but the way I would do it is, rather than have you guys come in and test things for the business, I would insist that the business create a team to begin with, that you train in how to test, rather than you do the tests for them. You become coaches, not implementers. But that has some negative, I see, but I understand exactly why you do what you do. What you're doing is specialized and difficult, and you want to develop expertise in it. So if you won't do it the way that I would do it, I'm trying to think, if I was your coach, how would I actually support what you're doing instead of just crapping all over it?
Scott thinks the same thing, right? No handoff he's ever seen go well.
Right.
So that's what he's coaching and advocating for, but at the same time, like you said, this is something that we're trying to get better as coaches by doing over and over again in multiple different settings. That's why we want to run multiple different teams throughout our career.
Yeah, I think you're better off as the brain parasite that helps, retrain people who are doing the work every day with no handoffs, like Scott and I, are on the same page about that. But let's say that I was wrong about that, and Scott is wrong too, and that you're right that this is something that requires dedicated functional experience. And I try to do these thought exercises because sometimes things are the way they are for a good or at least an immutable reason. So yeah, I know a better way that you magically restructure the whole organization, do everything different, and then we'll solve your problem. And you're like, well, that's awesome. Like, if everyone had a free pony, that would also be great too. But in the meantime, I'm actually in this particular situation. Can you actually help me with the problem I actually have, not with the problem you wish I had, which is surprisingly is a lot easier than the problem I actually have. So okay, if I was actually in that situation, and I take it for granted that you're right about this, the best suggestion I could make would be that rather than coming into a business and learning stuff for them, you at least get into more of a pair programming situation. We say, we will do the work for you, but you must give us some people from your team who will do it together with us. So that rather than doing so that if we're right and this needs to continue, rather than doing a handoff, we do a, what's the cell division? What am I thinking of? Is it mitosis or meiosis? Mitosis is the one where they split? No, it's two different kinds of splitting, you're right. Okay, sorry, my cell biology is very old and rusty, and it's also early in the morning that I mentioned. So you kind of, I was gonna say metastasize, that's how bad my metaphor grasping is, but that's actually kind of what I have in mind here, which is that you're infecting that division with this new way of working. And so you do the initial experimentation, that's mostly your team plus some of their people. As you get more mature, as you get more confident, you start to create for them an internal team that can carry it on, that maybe is if you started with 5 of your people and 2 of theirs, maybe you then go to a model that's 2 of theirs and 2 of yours. And then eventually you hope to get all your people out of there. Or maybe you then become kind of more of a coaching model, for the long term. But here's the thing I don't want you, the trap I don't want you to fall into. I was talking to a very famous consulting company, I won't name, but you probably can figure it out. And they were telling me a story about a very famous media company that you could also probably, I won't name, but you could probably figure out. They were engaged 10 or 15 years ago to build for this media company what they called the room of the future. Show us the living room of the future. Really, this is pre-mobile, pre-Apple TV, pre-tablets. Tell us what is the future of the internet going to mean for media? And they built for them this unbelievable, it took over a whole floor in their corporate headquarters and built for them this gorgeous, almost Disneyland style, walk-through experience that you could see the room of the future. And they were telling me a story. They're we got so many things right. We predicted tablets, streaming. They had 10 things that they had nailed. And I was that is really impressive. Futurism is hard, and you guys nailed it. High fives, awesome. Why are you talking to me? Why are we having this conversation? Well, that was 15 years ago. The company came back and they want us to do it again. And I said, great. Tell me about all the awesome products that media company built because of this room of the future. And they're that's kind of the thing. That company spent 10 years having all their executives and creative people, everybody went through the room of the future and learned about the future of the internet, and they managed to create exactly 0 new products as a result. They didn't actually use any of that information because, okay, you are a traditional media company making traditional products, and someone takes you on a tour of the internet in 15 years is going to have people have tablets. And then you're what am I supposed to do differently as a result of this information other than buy Apple shares when they debut the iPad? It's actually really hard, even if you know the future, it's hard to know what to do about it. So they were, of course, coming to me saying, well, the company, this is the great thing about the consulting business. The company asked them to do it again. But this time the company's but can you actually help us build some products this time? So like they got to have an even bigger engagement the second time. Talk about rewarding the wrong behaviors. So I don't want you guys to become the futurism division of Intuit. That's what I'm worried about. You go around predicting the future like Cassandra, saying this thing is doomed because someone's going to do blah, blah, blah. No one does anything about it. Rather, I'd like you more to be known as like the Johnny Appleseed, or pick your metaphor where like you actually help the company do those things and be prepared for when it comes. And in order to do that, you're going to have to take responsibility for that building phase. There's no way around it. You can't delegate or hand it off to somebody else. You have to say it's our job to train and manage those teams over the long haul. Even if they don't go on, even if they don't join our division, we still are their coaches. We still are like holding them accountable and really making sure that they stay on that disruptive path. Is that helpful?
Incredible. Thank you.
All right, so we're going to do one more question, take a break, and come back and do another round. Holly,
I was just, tell me more. What did you tell the consulting company?
Okay, this is the dirty secret of all these stories I tell. I try to end them on a high note. Because if you want to teach people, you don't want to be like depressing, but like the vast majority of people I give advice to do not take it. That is applicable today. No offense to my friends who just got this great advice. Like the vast majority of people are like, that was awesome, I'm going back to my regular thing. So I'll take exactly what I told the consulting company. I said, listen, I would be very happy to help you deliver a new proposal to this client, and I'll do it for free just because I want you to be successful and we're friends. You have to go to them and say, we will be responsible for building new products for you. We will not build you a room of the future. What we will do is we will pair with your people and we will develop a series of MVPs designed to demonstrate that our ideas about the future are correct. And we will validate not just that we have cool design concepts, but that these are profitable new lines of business that you should pursue in a disruptive way. And in order to do that, what you have to do is go to the client and convince them that that's something that they should invest in, and that they have to organize around these internal startups and all the recommendations I've been making over the last 2 days. So it's going to be a gigantic pain in the neck. But the flip side is you'll actually have created something of value this time instead of wasting 10 years of your life. And they were like, thank you very much. And that was our last conversation on the subject. Of course, and what's so funny is I started the conversation by saying, you're asking me for my advice. I'm going to tell you what to do, and then you're not going to do it. And they're like, no way, we think you are genius, and we're absolutely going to do it, like no matter what it takes. And I'm like, listen, I hear that all the time. I thank you for the stroke to my ego, but you don't know what you're talking about. I promise you, you're not going to do it. And they're like, oh, we totally are. I was like, here's what you got to do. And they're like, we're totally going to do it. Never heard from them again.
Did they build the room?
Is that?
Did they build the room?
I never heard from them again. I have no idea. So I don't know for sure that they didn't take my advice, but I'm pretty sure that they did. Yes, there probably is a new room in the future in somebody's fancy headquarters somewhere. But see, but I don't know. This is the thing I wish I had the answer. Maybe I could call them and ask. But what I'm really curious about is, as the client got smart enough to have insisted for results, like that's what I'm hoping I would hear is that they didn't get the gig this time, and the client said, this is not a plan that will give us results. What's the new thing? But I don't know. Most companies believe that most consultants are not going to deliver the results, and they buy the product anyway. So then it's like, why do they buy consulting services? It's a big mystery.
They got an amazing result. They got, for 10 years, people got to walk through the room of the future and feel like they were very smart.
This goes back to making people feel good.
Yeah.
It's like, yeah. I thought that was the goal of therapy, not of capitalism.
Well, consulting, therapy, fine line, right? All right.
Now we're way off topic.
So one of the things you can all tell that we have going on in this room, we have going on in this conference, is we have people at really different ends of the work spectrum. People who are in very brand new startups, people who are in very established companies doing new things. So we've just had a couple questions from the very established companies. And I wonder, can we get in, before we take a break, another question from a very young company? Laura Klein, I am so surprised to see your hand in the air. I'm just going to give it over to you. No, actually you do, because we're recording, so we would love you to use it. Please, thank you.
Hi. So I have a startup, and it is very small. We are 7.5 people. And because of the type of startup it is actually B2D, which is business to doctors, and it's a very small market. And we see the market growing a huge amount over the next few years, fingers crossed. But right now, we have a very small number of customers, and they do pay us, we do have revenue, it's wonderful, but it is almost impossible to do any real measurement, right? And we get this question all the time. I mean, because we could onboard a couple of new big practices, and that we could have, ooh, we have 100%, you know, growth in our one metric that matters, yay! But that could be because our sales guy, you know, happened to meet these people. It's not necessarily any particular marketing strategy. It's not necessarily any particular thing I do with the product. So help me figure out how to measure better. One of the things we do is I have a hypothesis tracker where anytime you propose anything largish, you have to write down, this is what I think is going to happen. This is why I think it's going to happen. This is the date I'm going to go back and check it on. This is what really happened. So we're doing that, but again, very hard to say that this thing caused this other thing a month later. And I think other people have this problem too, because I hear this question a lot.
B2B folks all the time have this question.
Yeah, and I'm like, isn't there a chapter in Laura's book on this very topic?
I'd like to get your opinion on it, and so that I can disagree with it.
Laura and I have worked together for many years, and so this is not the first time that we've disagreed about things. And I'm actually a big fan of the startup that we're talking about. So here's the thing about measurement. I feel like people are way too concerned with statistical significance and have bought into a kind of a bad model of what significant measurement means. So in the statistics world, this is called the debate between the Bayesians and the frequentists.
We're not in that world. Let's talk
Yeah,
about it.
I'm not going to get into that, but you can read Nate Silver's book on the topic, and it's great. The problem is, just because something is statistically insignificant doesn't mean it's wrong. And in fact, so the first answer to the question is, like, it's totally fine, and I think it's completely legit in this situation, to use all manner of small sample size measurements to at least get a directionally correct read. The worst that can happen is, as you grow the sample size, the result doesn't hold anymore. And so you got something wrong. But you're doing so many experiments in a startup that as long as the results of each experiment influence the next one, you know, going a few experiments down a road where you're like, oops, this premise was wrong, allows you to backtrack. The costs of that are not nearly as expensive as saying, well, we're just gonna like do Fantasyland all the time. That's the first thing is, you're in a B2B kind of situation, you have a relatively small number of customers. I mean, like, you know, think about it, I don't know if you guys came to any of the GE related sessions, you know, we do a lot of B2B products at GE, you know, like that sell to airlines. It's just like there are not that many airlines in the world. There are not that many, there are not that many utilities in the country. Like, not that many power plants get built in a year. Like, there aren't that many deep sea oil drills. Like, there just aren't that many. So, well, I'm very familiar with this problem, and basically, it's okay to have such really insignificant samples. The other thing is, measurement doesn't necessarily mean statistics. So, most of us who come like out of the consumer business, we're used to having millions of customers, and so we always talk about, you know, you do an experiment, you got 10,000 over here and 10,000 over there. You read anything from Amazon or Google or any of those guys about testing, it's always about, you know, dealing with the problem of having so many customers that you can't actually get to know any of the individual customers very well. And it's why so much of the consumer and these sort of advice is like, you gotta talk to your customers, you gotta talk to your customers, you gotta talk to your customers. Well, I got B2B companies who are like, I have to talk to my customers 20 times a day just to run my business. So this is the dumbest advice I ever heard. Why are you telling me to talk to my customers? I got a different problem. I got this problem. So I think it's important for us to recognize that the richness of each data point in a B2B situation is simply exponentially higher than the richness of each data point in a B2C context. And I don't even like calling this B2B, B2C, because it's not really about consumers or businesses. It's just about the number of customers in the market. So it's really just about high volume versus low volume. It tends to be high volume, low margin versus low volume, high margin. So if you're in a situation where you can collect a tremendous amount of data about each customer, then we can make perfectly good inferences about what caused what. So, you know, we had a new, more improved UI, and the next client we tried to close, that really mattered because, you know, we spent an incredible amount of time with the customer. We looked into the whites of their eyes, and we know, based on the following signals, that it mattered. Now, you still have to be rigorous about it. Like, here's how people usually handle this. Sales guy just closed an account, he's awesome. Sales guy, what caused the account to close? Oh, it's me and my awesome salesmanship. Yeah, I know, but other than that. And then it's like, I'm the marketing person. Was that new marketing campaign? Totally. Bro, it was awesome. I'm the UX designer. Was it my new UI? Oh, I loved it. Okay, what's he gonna say? We're having a party. We're celebrating the close of a new client. He'd be like, your thing was awesome, your thing was awesome, your thing not so much. Your thing was awesome, you suck. You're like, you know, that's not a very nice thing to do. So you got to be rigorous about it. So I know a lot of companies that have checklists for the salesperson to evaluate, like very simple, like 5-point thing, like rate for me, for this customer, their level of enthusiasm about this thing, and this thing, and this thing, and this thing. Now, is that a perfectly accurate, psychological assessment? No. But our salespeople tend to have a pretty good intuitive sense of what's going on. They have a very accurate mental model of how the customer did behave in the interactions, and they can answer those kinds of questions. And then we can look for directionally correct signals over time. Right? What we really need to know is, are we making the product better or worse? Like, that's what we need to know. So what are the signals that we would look for if the product was better, customer by customer, cohort by cohort? And it's not going to be perfect. Like, I think classic thing is, for these kind of products, the cost of onboarding is usually a perennial problem. So, the speed at which we can bring on new clients is determined not just by how fast we can close the sales deals, but how quickly we can convert the doctor's practice to use our ludicrous new system. It's so complicated, and it takes sales engineers and application engineers. So if you think it's hard in software, really imagine power plants and physical plant infrastructure where the cost to bring a new plant online is sickeningly high. So if you're investing in trying to reduce the onboarding cost, then you want to measure that as best you can, customer by customer. Now, the next customer you sign on might only have 25 doctors, and the one that signs on after that has 250, and the one that signs on after that is a technology wizard, and they have a great IT staff, and the one after that doesn't. So you can't just take it. You don't want to let those exogenous variables drive you crazy, but you want to get a sense of, look, in aggregate, on average, customer by customer, are we getting better at the things that we care about, or are we getting worse? And look for, again, if the trailing indicator takes too long, look for leading indicators. So look for things like enthusiasm, look for things like the time in which they were willing to deploy. I know one company that was we wanted to measure just how many meetings were required to get the thing done and try to drive that number down. And again, it doesn't have to be a statistically significant sample as long as everything's directionally correct. Or does that actually solve your problem?
Yes.
But is there a but though in there somewhere?
No, I'm just disappointed that we don't disagree.
No, I was
Yeah.
ready for the smackdown. That's a shame.
Yeah.
That all sounds very hard, and I hope that there would be an easier way to do it, but we'll keep it.
Yeah, that is a kind of a common question template for these kind of situations. It's I had this hard situation with this hard solution. What advice do you have for me? It's remember Ben Horowitz and the lead bullets? Shoot the lead bullets.
Well, no, let's be real. After the break, we're going to do magic bullets. So everybody should come back.
Oh, yeah, right. Yeah,
That's
this was the hard one that
super
involved
easy.
math,
Yeah.
the boring stuff, and then afterwards it's be how to be the next Mark
All the answers
Zuckerberg.
you want to hear. All right, so
Guaranteed.
we're back in half an hour at 11. We will see you back here, and we will get more chairs in the room. Thank you all so much for getting us started this morning.